What's up, everybody? I'm here with my friend Mark Moss. We'll be right back after this brief disclaimer, so stick around.
You gotta grow your coins. Grow your coins, grow your coins. Grow your coins, grow your coins. You gotta grow your coins. Grow your coins, grow your coins. Grow your coins, grow your coins. You gotta grow your coins. Grow your coins, grow your coins. Grow your coins, grow your coins. You gotta grow your coins. Grow your coins, grow your coins.
What's up, everybody? I am the Crypto Crow. I am back. Yes, the Crow is back. You know, I didn't want to do a video until I had a really good reason. And Mark Moss, so I met this gentleman in New York at the Influencer Awards, and just listen to this guy talk. He's like a fountain of very eloquent, very well-educated information on cryptocurrency and just the market overall. Welcome, Mark. I'm very, very glad to have you. And keep in mind, for all of you, Mark has not paid me a dime to do this. I'm doing this because I really do like this guy. And, you know, talking to him, I'm like, you know, I just told him, I said, look, I'm the half redneck version of everything. You're the well-educated version of everything. So if we could bring the two worlds together to help educate everybody, we should do pretty well. Welcome aboard, man.
Yeah, thanks so much, Jason. Crow, I appreciate that intro. It was great to meet you in New York, and we've met several times since then. So awesome to get together and do this. And you're right, I'm not paying you a dime for this because we got nothing to sell. We're here just to provide massive value. And really what I like to try and do is just provide perspective, because I think, like most things in life, if you can get the proper perspective on things, it helps you understand them much better. So that's kind of what I want to bring.
Yeah, and we've been kind of going over what topics to touch on, and I'm excited. And I get so many people wanting to do stuff, and it's really not for lack of interest. I have so much stuff going on, and I really like to have a purpose. So, and I think we have a really good purpose. The hash war is officially declared over. What does that mean for us? It's over. You're already seeing a bit of a green market. Looking at everything's green a little bit. What do you think this says for the market right now with Bitcoin at 3720?
So I'm a fundamental investor. So that means I look for fundamental reasons why a particular investment may go up in value or what the long-term focus is. And I believe that fundamentals are very accurate for kind of predicting the future. However, they're pretty poor for short-term. So I typically try to stay away from short-term price action. So like you said, the hash wars are over. I don't think, in my personal opinion, I don't think they're really to blame for where we're at. I think they might have been like kind of the spark that kicked it off. But in regards to that, the nerd wars, as I like to call them, where the two factions of Bitcoin Cash are fighting, they basically called a truce. And now I think they're trying to move forward. So that was really good for the market. I think that was kind of like the spark that kicked it off, and then it was a domino effect. And I think if I had to guess, I think the biggest catalyst is really from the SEC. There's been like a multi-pronged approach from the financial elite, from the IMF, the central banks, and even the SEC, where they're really trying to crack down on crypto. And we've seen with the SEC now, a lot of you guys, if you're watching from outside the United States, you go, well, why does the SEC even matter? That's only the US. But you have to remember that the US is still the financial hub for the world. And so that's why it matters. But the SEC came out a couple weeks ago and started fining companies. And so far, it's only been fines. There hasn't been anything serious happening. But I think what's happening is a lot of these ICOs that raised money kept it in Ethereum. Ethereum's gone down really hard, actually, down 90% or so. And now these ICO companies are finding themselves without money. And now the SEC said, hey, you need to refund customers' money. but they don't have customers' money anymore. And so I think there's a mad scramble from all these ICOs that have raised massive amounts of capital, and they're forced to sell it right now. And it's kind of like when we see a stock market crash, like in the internet boom or in the 2008 crash, where all these traders that had margins, they were operating on leverage. They had margin calls. They were forced to sell at any price. And I think that's kind of what we're seeing. So we call it FUD, fear, uncertainty, and doubt. So there's fear because we're uncertain of what's going to happen. And I'd say that's a big catalyst right now.
Yeah, this has definitely been rough. Now, granted, so far it looks like the SEC has only come after 2 companies that I think. And while they're saying, okay, you've got a $350,000 fine because you ran an ICO under the utility token guise when you're actually a security. And the thing is, a lot of these companies, they were, it's kind of unfair in a way because the SEC came out with this very vague kind of rule about, well, if your company passes the Howey test, you should be a utility token. That's what they came out and said. And so, a lot of these companies were passing the Howey test, but there wasn't anything really that said, well, if you're running an ICO for a project that has not yet already been completed, I don't really think that was part of the Howey questions. I could be mistaken. I remember there being something about it, but not very specific to like the ICO situation. And so you have a lot of these companies that are kind of being blindsided in hindsight. And that's what a lot of these other companies expected to see happen, which is why a lot of companies said, you know what, we're not touching the US at all. We don't want US money. We don't want you involved. And so it was at that point that we started to see the market kind of fall. It was because all of the hype around Ethereum, a lot of the stuff going on that was pumping up the Ethereum value, and then, of course, Bitcoin doing very well. But I feel like when the SEC came in and started saying, look, this is what our rules are, and we're going to start coming after people, I think that started scaring a lot of companies. And so the question is, where do we go from here? What's to be expected?
Well, I think the irony is that supposedly the SEC is out here protecting our interest, right?
Sure.
So they're trying to protect the interest of the little guys, but I think they've done way more damage. Right. So I think they started this domino effect back in December and January. And really the entire market kind of dried up. The liquidity dried up because they said, hey, these are security tokens. They have to be on a security exchange. But there are no security exchanges. They didn't give anybody good guidance on how to launch token sales. And so the whole industry has basically been sitting for a year not knowing what to do. And so they've tried to protect people, but in reality, they've caused a lot of money loss. And another recent example is like Elon Musk. He got slapped with a $20 million fine for tweeting about the stock of Tesla. And so supposedly he manipulated it, right? Well, when the SEC slapped that fine on him, they manipulated it way harder. So anyway, irony there. But to get to your question, where do I see this going? I see all this working out. This is it's to be expected. They basically put us on blast, put us on notice a year and a half ago that they were going to do this. I think that they are dragging their heels and moving through it slowly, which I'm kind of okay with because I'd rather them not rush into something that can't be repealed. And like you mentioned, the Howey test, I mean, that's a test from like the 1930s.
Right.
And how
1933 Securities Act.
Yeah. So how can you use a test from 1930 for a blockchain? Right. I mean, it doesn't fit into that mold. So, I would say that this is just something that we're going to get through. And what I would say to people who are afraid right now, well, there's a lot of things I'd have to say. And I'll try and end with what you can do about it today. But what I would just say, first of all, just to kind of shore you up, is I would say that in life, we learn that success leaves clues. And what that means is we find other people that are successful and we do the same things that they're doing. In the investing world, and I've been a professional investor for over 20 years in all kinds of markets. And in the investing world, like the institutions or the Wall Street funds, they have to disclose stuff. They have to tell us what their positions are. And so as an analyst, you look at them and they're called what we call the smart money. And then retail investors like you and I, we're called the dumb money. So what we typically do in the investing world is we look what the smart money is doing. And I can tell you what the smart money is doing in crypto right now is they're going all in. That's what they're doing. And I can tell you that not as an opinion, but I can tell you that as fact. And the reason I can tell you that as fact is because we can see it. So just in the last several months, we've had some of the best and brightest minds from the financial world leave to go to crypto jobs. I mean, we had the vice president of Goldman Sachs left to go to a crypto company. We had another vice president of Goldman Sachs left. We had another person from Facebook leave to go to CoinBase. We're seeing this over and over. So I don't think those people are leaving these high-paid jobs at Goldman Sachs to go work in an industry that's full of scammers and going to zero.
Right.
We know that, right? We also know that Goldman Sachs, and if you're not familiar with Goldman Sachs, do a little bit of research, but they're basically the kingpin of the entire financial world. They're not subject to whims of the market. They create the markets. They've probably spent $1 billion in the last year to get into crypto through their subsidy company buying Poloniex exchange for $400 million to set up their trading desk. Goldman Sachs would not spend $1 billion in an industry that's going to zero. They wouldn't do that. We've also seen TD Ameritrade and Fidelity, two of the largest financial companies in the world with assets into the tens of billions of dollars or trillions of dollars, both announced they're opening up Bitcoin trading by the end of the year. They've been working on this for over a year. Again, they wouldn't spend that money and do this work for something that's going to zero. Does that make sense?
Right. Now, while that's definitely true, a lot of these companies are going in expecting big things from Bitcoin. How do you think that? So, and I've been telling everybody for a while, the foundation is being laid, and I've been saying this for a while. So, it's to me, I see the Bitcoin price action, the investments going into, like, I'm very familiar, like when you and I were on that panel in Vegas, I talked about the over-the-counter markets, and it was kind of, to me, I feel like the over-the-counter trading really cheats the public in a way, but it's something that happens with all markets. So it's difficult to say, well, this is terrible, wrong, and should be illegal. I don't really feel that way. I mean, look, if I can make a deal with, 1 billion Bitcoins or something like that, I'm going to make it. Like, it's just how it is. It's all a part of the market. But when you see how much volume is being traded over the counter that could be supporting the entire cryptocurrency market right now, it's painful to see. And so the question that I kind of wonder, and, when I've gone into big positions with some of these altcoin projects, I feel that I've gone into all of the projects that I feel are going to play a significant role, 2019, 2020, and ultimately be much more valuable. So how do you see a lot of what's happening affecting the altcoin market, not just Bitcoin?
Well, so what we do know from studying history, I've studied all the financial or the technology cycles for the last 200 years. There's really been about 5 of them talking about steam engines, railroads, automobiles, et cetera. And we see the same cycle. There's 4 phases of a technology cycle, and we see it always play out the same way. In the automobile boom, for example, in the early 1900s, we had 1 automobile company, we had 3 automobile companies, then we had 100 automobile companies, and then it went back down to 3. Ford, Chrysler, GM, they survived. We saw the same in the internet space, in the late 90s, early 2000s, 90% of the internet companies went out of business. Didn't mean that the internet was never going to work. That's just a natural progression of a technology cycle. And so I think we're in the same thing where the technology booms, money gets ahead of the technology, which is what we saw end of last year. And we have all these blockchain companies. So the first thing I would say to answer that question is I think a lot of these are going to go to zero. They're going to go bust. I think a lot of them have no reason to be in existence, meaning that they're just trying to throw crypto or blockchain on their name and really there's no good use for it.
Well,
and then I think
there's like 1,600 companies. So when you say most are going to zero, I have 35 that I think are going to do well long term. And I didn't invest in any of these shit, like these crappy, these crappy projects. So, when people hear most of them are going to go to zero, most of them could be, 1,000 of the 1,600 projects or even 15 or, 1,300 even is fair if a lot of these went to zero. While the cream is certainly going to rise to the top and has been. So I don't want everybody to freak out completely in the sense that, yeah, there are 16, 1700, there might even have been 2000 or
Yeah,
more
there's
projects.
over 2,000 on CoinMarketCap right
Yeah,
now.
I mean, there you go. So
and yeah, I don't want anyone to freak out either. And like I said, this industry is not going to zero. It's going to be massive. But like all technology cycles, we see kind of this initial boom and then bust and this kind of pruning, which then allows it to grow bigger and stronger. And so, Crow likes 35 positions. I'd say there's probably more than that are good positions that are worth a bet. But when I say that a lot of them are going to go away, that doesn't mean the industry is going to shrink. That means more will just come and replace them, right? Sure. So, like in the internet space, for example, we had all these internet companies go bust, but today there's way more than there ever was in 2000, right? So it's kind of like a pruning, right? And it's going to grow bigger and faster for sure.
Yeah, I absolutely agree. I tend to focus on projects that I felt had not only real world applications, but a real interoperability. Like I saw Aeon was at like 44 cents recently, and then just dropped down to like 13 or something crazy. And while it was kind of shocking in a way, it's when you're looking at one particular project and you neglect to see what's happening with everything else, people can get kind of sticker shock, like, holy shit, what just happened? My big project is gone down the tubes. And it's not. What's up, Data Bunker? Thanks. $10 tip, and he didn't even have a question. I'm not sure.
Right, good job, Data Bunker.
Yeah. So yeah, I like projects like Qtum, Serum Labs. There are a bunch of them, man. There are a bunch that I think are probably going to stand this test of time. And I will say that I think that once we get past this point, God, what's the term for the current market condition in the market cycle? Is this hysteria, like sheer panic? Like, where are we at right now?
There's no official metric, right? So everybody kind of has their own opinion, but we're somewhere between like anger, fear, and disbelief, right? And I would even argue we're definitely seeing capitulation. So we're somewhere in that phase. Which hopefully is the final phase before we can grow. But you have to understand, like, all market cycles work the same way, where you kind of have this consolidation phase, and then you have it slowly starts ramping up, and then it goes up faster, and the top of every market always goes up the fastest. That's the parabolic, or we call it a blow off top, and then it comes crashing down. And then we have this bear market through these anger, fear, disbelief. And then it slowly starts building. And over time, it picks up speed. So I believe we're almost to that. I think we're almost in that consolidation phase right now, where we're going to be kind of sitting in a bottom for a little bit. Then we'll, through Q1 of 19, we'll slowly start building up some momentum. And, we're not going to get right back to the parabolic speed we were at the end of 2017 right away, because that's at the end of the cycle. But we'll get there. And I just think that the prices that we're seeing today are creating such a massive opportunity for everybody who got in late and missed it.
Mm-hmm. I absolutely agree. I tell everybody that all the time. If you're getting into the market right now with fiat, you're in heaven. But
what the other thing that I always like to say, again, being investing in all kinds of markets for 20 years, I would just say, given the perspective is I think most people's time frame is off. And so they saw what happened at the end of 2017, where like you could buy almost anything and in a month, double your money. And that just wasn't realistic. That's how the blow off top works. But markets don't work that way. And I think, especially when we're investing in new technologies, we have to allow them time. And so, I'm used to investing in assets that take a long time. For example, I've been in this oil field investment, and it's been about 1.5 years, and we haven't even got the other holes drilled out yet. I'm not making any money on that. That's fine. I have a 5-year window on that. I have real estate projects where we're building apartment buildings, and it takes 5 years. So I think if I'm in this looking at 3 years, 5 years, 10 years down the road. And I think if you have that perspective and that time frame, you're not really worried about that short term as much.
Well, and I agree with you there. I think, and I never got into this. I never really did much of this. But a lot of people were seeing a lot of YouTubers go in, buy in on an ICO, talk about it on their channel, wait for the value to go up or hit a really hard spike, and then dump it. And a lot of people were flipping these ICO projects and then reinvesting. Well, while it looked great at the time, they took a big hit too, because unless they liquidated into fiat, on a high, well, they took the same kind of hit that a lot of these big ICO projects did that would get $50 million in Ethereum. And now it's worth 5 million if they're lucky. Right. And so, I think that the cryptocurrency market as a whole brought in so many newcomers that looked at that instant gratification potential and then relied on a lot of the YouTubers out there to tell them, well, these projects are good. And, and then they would buy in and then they would try and flip them and do the same things. And that created some confusion. Like that's why when I started doing my channel, I did this whole, crow your coins, right? It's basically, I buy into businesses. I invest into business. I never got into the whole ICO flipping thing. It's like, I would look at the team. I would look at the project. Where do I see this project or this company going in 2 to 3 years or over the course of the next year minimum, right? And so, anytime I reviewed something or I looked at something, I said, okay, where do I see this potentially in a year, given their roadmap and their team and what's their capability of making this happen? And a part of that is because I didn't want to pay capital gains. I didn't want to pay high capital gains on everything I touched. So I wanted to know, where do I see this in a year? So that if I buy today, I hold it for a year, where will I be? And that was the big question that I always ask myself when I'm going into a project. And I think that moving forward, the companies that are still around and really start cranking out new updates, new releases, all of that stuff after this, I think we're going to see who's in it and who's not. And it's definitely going to be an exciting time, I think.
Yeah, I agree. I think, what you're saying is exactly right. And to kind of put it in like a simple analogy, I like to use real estate because a lot of people understand that. And, if I told you that, hey, the city council just voted to build this new stadium 20 miles out of town in 5 years from now, well, that would be an opportunity to go buy that dirt around the stadium for super cheap right now. Hey, I know in 5 years that stadium's going to be built. I'll go buy that dirt right now for super cheap. In 5 years, once that stadium's built, then that land will be worth even more money, right? So that'd be a good investment. But that's 5 years, right? So what happens if the next year, after 1 year or 2 years, the land's actually cheaper than I bought it originally? Am I going to panic? Well, I don't know. Is the stadium still on track for being built? Are the permits getting pulled? Are they meeting with architects? Have they got financing? As long as the project is still on track, then I continue to hold. Maybe I even buy more land, right? I buy the dip. Now, and as that continues, year 2, year 3, year 4, I want to always monitor the project. Is the project still moving forward? Is my assumption, the reason why I entered that position, is my assumption still true? As long as it's true, I continue to hold. Now, if I find out that the project went off the rails, they lost their financing, whatever, well, then I need to get out as quickly as possible. And so that's kind of the same with this crypto project like you're talking about, right? Where as long as they're staying in it, they're continuing to develop, the markets, the trends are continuing, and everything is still working towards that assumption you had made when you first bought in, well, then you hold. And if your assumptions change, then you got to get out right away.
Right. Absolutely. I couldn't have said that better. So, now you and I Love Crypto, I actually met you with I Love Crypto with Jacob. He's another sharp tack, man. I mean,
He is.
He's one of the few guys, like he's not always available. I'll send him a message and I'll get a response like a day or two later. But he's just busy as hell. He's got a family. He's got, all kinds of shit going on. But if there's anybody out there that I really wish would do a freaking Udemy course or something, I want to know exactly how he does what he does, because this guy seems to be printing money in any market. And I know that the two of you kind of work together. You focus a lot on the fundamental side of things. He focuses a lot on the technical analysis side of things. And you guys kind of just crush shit together. Now I know that do you guys work? Do you work together on the whole the signals? I know that he has, like, because I'm in that signals group on Discord and all that. Like, do you guys work together on that, or is that just what he does and you do something else?
Yeah. So first and foremost, both of us got into the space just because we wanted to give back. We both started originally just trying to help people, and that's really our focus today, which is why we continue to give massive, massive value and education away for free on our YouTube channels. I make all kinds of guides and PDFs and checklists, and it's all for free. But we are business partners, so we do have a business called Signal Profits, and in that we show people, teach people, give people technical analysis information as well as fundamental. So there's stuff for investors, there's stuff for traders. So we work super close together with that. But like I said, that's for people that want to be fed as opposed to learning how to grow their food and cook it. So we definitely are out there trying to just give as much value as we can for free. He's extremely bright. He's got a really, really, really high IQ, and he's got a photographic memory I wish I had.
Oh, I hate those guys. I knew a guy like that in high school, bastard. Read an entire book in about 3 minutes. He actually, this guy showed me, not Jacob, but a friend of mine. He would read books this thick in an afternoon and know everything in it. And I'm like, oh my God, dude, if I had that ability.
Yeah, exactly, man. It would sure come in handy. But so we work really well together, and we both kind of bring two different perspectives. So we come together, and it makes magic, and it's worked out really well. But he is looking more at the kind of the short-term analysis. But I would say that, in my opinion, I don't think, short-term analysis, technical analysis is really looking at one bar at a time, and it's giving probabilities. If it goes to here, then this could happen. But if it goes to here, then this could happen, right? Where I think fundamentals are more reliable, like I had said earlier, over the long term, because, a law or regulation that changes today will tell me what's going to happen in the future when that law goes into place, right? So that's why I like to lean towards the fundamentals. And a couple of fundamentals that I'm really focused on right now, and we talked about this on our panel, is and I'd like to just kind of talk to everybody about for a minute, is that as most things in life, they can be boiled down to pretty easy principles. And so markets stop going up when there's no more buyers.
Right.
Markets stop going down when there's no more sellers. So let's take a look. Knowing that now, if we look back at 2017, we had that massive run up. But, crypto and Bitcoin, blockchain, whatever, was all relatively new. And if you went to the mall and asked 100 people if they knew or if they had any crypto, I bet 99 would go, what? So there was 1 or 2% of people of the world involved in it. And so the market was running out of buyers. Anyone that knew about had bought in, the market was running out of buyers. But then it got worse. And this is where maybe there's a little conspiracy. Maybe it was coincidental. But right at that time, all the banks shut off the on-ramps. You couldn't have your bank connected to CoinBase. You couldn't use your credit card. So all the banks coordinated together to shut off the on-ramps. At the exact same time, all of social media, Facebook, Google, Twitter, all banned cryptocurrency advertising. So they made it impossible for new buyers to get into the market. So markets are going to stop going up when that happens. And so this was, public. So Google, Facebook said, we're banning advertising. Banks said that. So that was fundamental news we saw, knowing that the market was going to get halted because of that. The irony here is that now it's been a year, and I think, crypto really ran away from these institutions, and we talk about them coming a lot. And we saw just in the last 60 days that TD Ameritrade and Fidelity and ICE Backed all announced that they're opening up projects, Bitcoin trading, and that's going to bring in billions of people. And if they just announced they're going to open that up, that means they've been working on it for a year,
right,
at least, to get through regulators and all their technology things that they have to do. And right as they announced they're coming online, Facebook and Google announced that they're going to allow advertising again.
Right.
So we have these two big financial powerhouses coming online with Bitcoin. They've been working on it for over a year. At the same time, Facebook and Google is going to allow them to start advertising again. And so what happens when new buyers start coming into the market again? It goes back up. So we've kind of exhausted the sellers. We're seeing that because we have really, really, really low volume. There's no volume, so the sellers are exhausted. The RSI is I think it hit the lowest point in history on Bitcoin, way oversold. And at the same time, we have these new platforms opening up with new buyers and new advertisers and new money coming in. And so that tells us fundamentally what's going to happen in the near future.
Well, this all goes into my whole how this whole thing has been orchestrated. I mean, the fact that we're literally around the corner from the potential of this big CBOE ETF being passed in February on hopefully the 27th, if it happens, and all of the crazy shit that's been going on leading up to this point over this past year. And I would really love to know how I want to be a fly on the wall of whatever private meetings are going on, if there are any. But just like you said, man, from start to finish, this whole thing feels like one big orchestra. And it's a big orchestra because I feel like the institutions, the banks, all these people were kind of looking at what was happening with Bitcoin, and they were starting off at what their plans were, maybe not even expecting everything to take off the way it did, or maybe they were. Like, if you look at all of the news and all of the websites out there, man, you can buy an article to say anything. And so, if these guys are all in there pumping things up as a test run, you know what I mean? Just like how far can we get this in this kind of, in this period of time? Oh, okay. Question answered. We went from like, $8,000 to 20 grand in like 60 days or less. And so now we get an idea. The public will buy into this, but now we got to get to work, and we need to get everything structured to make sure that we're all in at the bottom, and then we can start this thing up. And then we can go ahead and just replace fiat currency altogether once we have our infrastructure in place and we've jacked up the because a lot of these guys, I feel, these institutions, I feel like they're accumulating now en masse. And I don't even know if there's a law against this or not, but if they are all buying this stuff at $4,000, and then in 6 months from now, if Bitcoin is worth $25,000 and they get new investors, are they able to then sell the Bitcoin at $25,000 to their own investors and further increase their profit? And then if it goes up from there, take an additional commission on the difference? Do you know how? That's something that I don't know. I don't know how that works, but it feels to me like that's exactly what's happening.
Yeah, so they're buying it at 4,000 and then they'll want to flip it at 25,000. Yeah, for sure. I mean, that's what they want to do. I think most of the OTC buying though is really these big institutions that have already announced that they're going to open up these desks. So we already know that Fidelity and TD Ameritrade are going to start selling Bitcoin to millions and millions and millions or billions of customers. And so they have to start buying it now, and yeah, they're going to start selling it at whatever price it goes up to. So it's not a big conspiracy. We already know that they're going to be doing that, and it is interesting to think, right? Like everyone that's selling, there's somebody buying it, right,
exactly. And it seems to me like, well, and I know that there's a lot of demand. I mean, I know people that are trying to buy a lot of Bitcoin right now, and it's difficult to even find sellers. No, you can't find sellers now. I could probably sell, or I could probably buy 300,000, 500,000 Bitcoin right now if I just had a legitimate seller. And it's like, you can't find them. So but the thing to that is there's still a lot of demand for it, not enough sellers. So when do these guys start going to exchanges to buy, and start pumping that price up a little bit? That's what I've been waiting to see.
Yeah, they can't, they can't. There's just not enough volume for them. So they want to buy big orders, and I just don't think there's enough liquidity on an exchange. So they probably won't, at least not now. What will happen is eventually we're going to find that bottom and we'll get this consolidation pattern and things will settle down. Then slowly things will start going up. And that's when you start going in that disbelief, which is that last phase of the psychological process. The disbelief where people are like, no, this can't be a recovery. It's not happening.
Right.
So we'll see that. Then they'll start to see it in their Fidelity or their TD Ameritrade account. At the same time, they'll start seeing in advertising, and all of a sudden the sentiment, the mood will start changing. And then the average person will start going back onto the exchanges to buy. That's what will happen. So it'll start slowly, and then it will grow from there. And like I said, I think by Q1 19, we really start to see that happening.
That's my hope. I mean, I set up my Chainwise convention for February 15th for a reason. Like, I expect to see a lot of stuff kind of happening around that time. And my hope is that if things really start to uptick and things start to turn around by then, that there are a lot more questions. There are a lot more people with questions about what this blockchain space is. And, I know that a bunch of shit happened last year. Is that going to happen again? All these questions. And then I hope they come to Chainwise to get educated and really kind of learn, what to expect.
Yeah, I think that's awesome what you're doing with Chainwise. I mean, really opening it up for the public to come in, because a lot of these conferences have gotten so expensive. It's almost impossible for the average person to come in. So what you're doing is awesome, and you're kind of on the same mission that Jacob and I are, which is really just to educate people.
Right.
And so I'm happy to be behind that, and I want to be out there for that as well. But really, I think it's important to educate people. And what I've really been, I'm trying to start a little hashtag on Twitter, why Bitcoin. So everybody wants to know what is Bitcoin, but I want to say why Bitcoin? Why do we need Bitcoin? What's really going on here? And I think if people could understand, more fundamentally of why we need it, why we need privacy, why we need freedom, why we need a hard sound money, things like that, then they can believe in it even more. So
yeah, I'll hashtag why Bitcoin. So how is this market going to get to 100 trillion?
Yeah. So how it's going to get to 100 trillion? It's a big question, but basically it's going to pull value from other markets. So what happens is every new technology we have, okay, well, first you have to understand that we get paid in life. The amount of money that you make today is based off of the amount of value that you provide. The more value you can provide to the world, the more money you make. You're at your current job making X amount of money. If you can figure out a way to bring more value to your employer, they'll pay you more money. As a business owner, if I can provide a way to provide more value to more customers, I make more money, right? So if you understand that concept, then you understand that each technology creates more value, and therefore each technology cycle grows bigger. So for example, the automobile boom, created massive value. Instead of having to walk or ride a horse, now I could ride a car. I could get from A to B faster than before. That's great. So Henry Ford accumulated about $180 million, a lot for 1900. But the internet boom, for example, created way more value. Now we're doing what we're doing. We're streaming video live. I don't have to travel anymore. It took value from the automobile industry because I don't even need to drive in a car anymore. I can just video conference with you. So it's taking value from the previous cycle and it's grown way bigger. So that the internet cycle or market is in the trillions of dollars, hundreds of trillions of dollars. And I believe that the blockchain technology boom is going to create even more value and then also take money from the internet cycle. So we can look at a couple industries or markets that it's going to disrupt and how it's going to pull that value. And so, for example, they're saying Bitcoin is a digital gold. Gold is used by investors. I have physical gold. The reason why people own physical gold is as a hedge, a chaos hedge, an inflation hedge. If the dollar runs away, then I have gold. And it's kind of like an insurance policy. And that market is $8 trillion right now. 8 trillion just there. But a lot of people are buying Bitcoin for the same reason. Well, I'm buying Bitcoin because it can't be confiscated, can't be seized, can't be stolen, and I can hold. If the dollar goes to heck, I have Bitcoin. And I think the younger generation is much more likely to buy Bitcoin than they are gold. And so if the percentage, if the gold market, $8 trillion is because people are hedging, I think a big piece of that comes right into Bitcoin. Bitcoin's going to steal a majority of that. So there's $8 trillion right there. And we can continue to add this up. We can look at over the last 5,000 years, the most hard sound money, the best what we call store of value, SOV, always wins. That means I should be able to put my money into savings. I'm a doctor. I should be really good at being a doctor. I should be able to put my money into savings, and my value should be able to be stored. It should hold that value over time. What happens is the dollar is a horrible store of value. They've designed it that way. They want you spending. And so our dollar's lost 90% of its purchasing power in the last 50 years. And so now that doctor is forced to become an investor. Now he has to go buy real estate. He has to know stocks and bonds and securities. He shouldn't have to. He should be a really good doctor, but because his money loses value, it's a bad store of value, he's forced. So throughout history of the last 5,000-6,000 years, the best store of value always wins. If what you're putting your money in is holding value better than what I put my money in, then I'm going to start putting my money in the same thing as you. And so the best store of value always wins. And I believe Bitcoin will become the best store of value. So, and not overnight, but this could be a 30, 40, 50 year run out. But there's $80 trillion just in currency, 80 trillion. So imagine if we take a big piece of that, right? And then a lot of people that bought stocks and real estate don't really want the stocks or real estate. They're doing that just to get a better return than they can on holding cash. So maybe 30, 40% of those markets come over into Bitcoin and crypto. And you can see really quickly how we can start adding up. Then we have another $30 trillion that's parked in offshore secret accounts, Cayman accounts, Switzerland accounts. There's $30 trillion sitting there. And Bitcoin can do the same thing even better. So for example, like 2 months ago, a big Russian family had like 500 billion seized by a Swiss bank. They'll start putting their money into Bitcoin. And of course, that's what the regulators are trying to tell you. It's all for that. But you can see really quickly how it starts taking value from each one of those markets, and it can build it up to 100 trillion really quickly.
Dude, you broke it down so perfectly. And you know, it's funny because you have a lot of people out there, millennials and younger, who they've all just kind of nobody wants to deal with the stock market, right? The stock market feels like such an old man's game. It's one of those things that, you know, it's stocks and bonds and it's Apple and, you know, it's like an old man's game. And I feel like there are so many young people who are learning and so knowledgeable now about the cryptocurrency space. And I used to think, why? Well, because it's being a part of something before anything really exists and being able to learn about every element in a time when it's possible. Right? And so you start to feel like you know what's going on. And then you start to study and understand patterns in this market, our world, the crypto market. And it becomes ours, right? You start to feel like you are a part of it. And with that comes the confidence to then make investment, right? And so it doesn't feel that way in the stock market because you know you feel like you are competing in trades against other people like you. And so it feels more promising, you know, as opposed to, well, if I buy into a stock, well, I'm going up against all these trillionaire bankers and all of these big power players, and it's daunting. It's this feeling of, well, it almost feels more like gambling where you have less control, right? And the excitement in crypto has come from knowing about something that maybe, you know, when everybody is told, oh, well, Fidelity and Goldman Sachs and none of these groups, they can't even touch it. This is our thing. And it builds that excitement. Like you're a part of something these fuckers can't touch, right? And so, and that's really a part of it for me. It's kind of like, it's been more exciting. And now that's all changing. And so, you know, I feel like we've seen how far we could potentially get on our own, but I do believe, and while this is a growing pain, I do consider the current market conditions a growing pain. I feel like it's a necessary evil in a sense to take things to those that are holding, to those who got in and have been holding or accumulating or, you know, doing that kind of thing, buying the dips and just kind of building their treasure trove. I feel like it's the institutions that are now going to take this market from where it is right now, and it's going to send it way beyond the 20,000 high we saw with all the dumb money going in. And I think that we are going to get to a point where once these institutions are in and and business is transacting on a regular basis, day in and day out, and we become the new NASDAQ, we become that new Dow Jones, that new market, that I feel like a lot of more of that money is going to enter our space. The volume and the value of a lot of the top coins and projects are going to be untouchable by most people, unless they're looking to get into it on a fractional basis. and I think once we get to that point, I don't believe we're going to see the big market swings every year like we have for the past 4 or 5 years.
Yeah. I agree. There's a lot of things you covered, and you said a lot of really good things. So hopefully everybody was paying attention. A couple things I would add to that is, one, you're absolutely right, where it's kind of this younger generation is first to jump in. And that's just because younger people don't have what we call like a normalcy bias. So they're not used to the old way. So it's much easier for them to jump in the new way. Like, for example, like my mother-in-law still goes and writes checks at the grocery store, right? Like she's just so old, like that's just what she knows. Whereas like, most 18, 20-year-olds today have never probably even written a check, right? It's all done online banking. So we're easier to jump in. But one thing that I'm really excited for, because I believe in more freedom and less government. That's my political leaning, whatever that means. I don't know a party to jump in with, but I believe that we should have the right to freedom, privacy, and I like limited government. And really, that's what Bitcoin promises us. And I've been big on that, and I really wanted to push that agenda. And so when I heard about Bitcoin for the first time, that's why I wanted to tell everybody about it. And what I'm really excited about is, for the first time in forever, I'm seeing this kind of new interest in fiat currency. Like nobody even used the word fiat currency until a year ago, right? Now everybody talks about fiat currency and they know what that is. Now people are starting to watch and pay attention to the debt the governments are creating. People are starting to watch and understand how the government manipulates markets and seizes money. And now it's creating this new awareness that can actually generate a meaningful change, a revolution. And so I'm happy. I'm happy from that standpoint. And I believe that over the next, it's going to take a generation or two to cycle through, but over the next 2 generations, it's going to be a massive shift, and I'm excited for that, to happen.
Right. Yeah. I can't I can't say that I'm not depressed about how many people are being wrecked right now, but I also can say that I once this is over, I think it's just going to be an exciting year. Like, I do believe that 2019 is going to be exciting. I see a lot of people talking about, this could be a 1 to 2 year bear market, this and that. I don't see that happening. I think a lot of shit is happening right now, very quickly. And honestly, I really do expect things to start turning around in February. I mean, and I'm not saying that, we're going to wake up and Bitcoin's going to be 20 grand at the end of February, but I think that we're going to start seeing the progression to the upside. And I think that's going to be a time when, a lot of this stuff that's happening right now really comes together. And then from there, I think the sky's the limit.
Yeah, I agree 100%. And that's kind of what I said, right? Through the Q1 of 2019, we're really going to start to see this bottom out and start going back up. All these fundamental things we've been talking about are all coming into fruition. The media and people that don't know what they're talking about tell you that Bitcoin and Ethereum have scaling problems. Don't listen to that. They don't have scaling problems. The technology is exactly where it needs to be today, right? We have the base layers. We're building second and third layers on top of them. I constantly tell people that when you're investing in new technologies, looking at the price is the wrong thing to focus on. What you really want to focus on is innovation and adoption. And we've seen massive innovation and massive adoption at the same time. And that is what tells us where the future is going. The price is just kind of catching up to what's happening with innovation and adoption. So focus on those things. And I think 2019 is going to be a great year.
Yeah, I mean, the price has gone up a bit since we started our video.
Nice.
But
I don't know what that means. I did want to say something maybe before we jump and look at that. Is you had mentioned like all these people that have gotten wrecked, and I want to talk about that just for a second. So,
sure.
What for those of you that are watching who bought in, in January or February or somewhere in 2018, and now you're wrecked or whatever, right? So let's talk about that for a minute. First of all, you've heard the saying, I never lose, I either win or I learn, right? So hopefully you didn't win. So hopefully you're learning from this. And really they say success is a horrible teacher. We learn from our failures. And so if you've lost money, take the time to figure this out. In 2008, I was on top of the world, or so I thought. I was retired at 30, had built up a massive real estate portfolio, and I lost it all. And it crushed me. I mean, I was millions of dollars in debt, and as depressed as I was, I had to figure out like what the heck happened and how do I make sure this never happens again. And so hopefully a lot of you guys can use that as fuel to build off of. So if you're wrecked, what can you do? A couple of things. One, obviously, like I said, try and learn from this. A couple other things you can do. First of all, you should never really be wrecked, because you should have never put your entire life into this. In investing, the main principle for success The number one key for success is asset allocation. So I have money in real estate. I got money in oil fields. I got gold sitting there. I got cash sitting there, and I have crypto. If all my crypto went to zero, I wouldn't be happy about it, but my life would not be wrecked. My other assets are still there, and I could still continue on. So hopefully, you guys didn't. If you did, again, learn from this and know that you should only put a portion of your assets into speculative, risky assets like crypto. If you went too big and you got wrecked, just try and move forward. Try to think about asset allocation. How much do I want to put in? 10% of my investable assets, 20%, 30%, only put that in. Also, now let's say that you're already in and you're already wrecked, and now you bought these assets and now they're way, way down. Well, a couple of things you can do. If you still have additional fiat, you can put more fiat in today at these prices, and it brings your average cost down. So let's say that you bought Bitcoin at 10,000 and today it's at 4,000. Well, you could buy more at 4,000, and now your average cost of Bitcoin is only 6,000 or whatever that number is, 6,500. And so now it brings your position size down. So you have, it's way easier for you to get back to a profitable position. So again, don't put in more than you should have allocated originally. And each person, it's up to you to figure out what that amount is. But now is a good time to put more money into fiat to average that position size down if you're not over your allocation. And then also, when to do that is, I don't believe that picking bottoms and tops is possible. It's not realistic. You might get lucky once or twice, but realistically, it just can't happen over time. So what you do is you layer in or you average in. So, right now, Bitcoin's at 3,800. Could it drop to 2,000? Could it drop to 1,500? I mean, anything's possible.
Anything's possible.
So if I bought a little bit, so say I'm going to put in round numbers, I'm going to put in 10,000 more into Bitcoin. Maybe I only put in 2,000 today at 3,800. And then if it drops to 36 or 34, I put another 2,000. And if it drops to 2,800, I put another 2,000 and I layer down. And that way I'm bringing my average cost down. And if it never goes down and I never get the option to buy, then I layer as I go back up. So those are a couple strategies that you can do if you're wrecked. But hopefully you didn't put in more money than you could afford to lose. You didn't risk your entire life savings and assets and house and all that in it. And if you did, just learn from that, dust yourself off. You're going to have another opportunity right now. Just do it right this next time. Take profits. Nobody ever went wrong taking a profit. As soon as it goes up, take your money off the table, play with house money, take your profits on the way up, and use position sizing.
Well, and I think that the big key, a lot of people don't realize that, not investing more than you can afford to lose isn't necessarily like because you're going to lose it all, but doing that kind of helps you from making bad decisions later. In other words, if I only have $5,000 to my name and I'm investing in the market today and the market goes to 3,000, well, now I'm scared shitless and I'm going to take my $3,000 because I can't lose that. That's all I have left. And it's that fear selling, that panic selling that inspires. But if you if you're investing into something that you feel confident in long term, the swings don't sway you. And that's the idea. You're only really wrecked if you sell at a loss. And that's, if you're crowing your coins, you don't have to sweat that stuff. It's just, I tell everybody, like, I have not swing traded or messed with my altcoins. I go into a project, and if I do anything, I will double down on something, or I will average down. And that's it. If I believe in the project, I believe in the project. I'm not scalping trades on altcoins. I know a lot of people make a lot of good money doing that. And I'm not going to lie and say that I want to do that. I want to learn more about that sort of part of trading. But when I do that, I'm going to play with $1,000 and learn. I'm not going to dump everything I've got into something. I'm going to throw play money at it and do some fun scalping, more just to keep busy.
Yeah, that's such a good point that you bring up. And when we first started hitting really turbulent markets, I started telling everybody, if you're losing sleep over this, that means you have too much invested.
Right. Absolutely.
Bottom line. If I put $500 in, that could turn to $50,000. But if the 500 turns into 100, I'm not really going to lose any sleep over that. So you got to think in those terms. And like what Crow said, I mean, is absolutely right, is you got to be able to weather the volatility. If you want to wait until there's no more volatility, get in 2 years from now or 3 years from now. The market won't be near as volatile, but you're not going to have the big upside either.
Sure.
So this is the price that we have to pay for being early. And the only way you're going to be able to withstand that is to use small, rational position sizes.
Derek Christopher, when do you take profits? When price action hits the profit targets you present for the trade? Yeah, a lot of guys keep track of their trades in Excel, and they basically set a price target. They say, okay, well, I'm going to invest at $1, and I will sell it when it hits $1.30, because the profit you expect is going to be based off of the amount you're playing with. If you're investing with big money, you buy something, you buy 50,000 of a particular coin and it goes up 30 cents, multiply that by 50,000 and there's a big solid profit. Take your profit and go into another project or wait for a pullback and start over. And that's what a lot of these guys are doing. So,
Exactly.
Your profit is what you're comfortable with. What's your goal when you make the investment?
Yeah, and that's a personal question that only you can answer.
Right.
For myself, I've invested in lots of pre-IPO stuff over the years, and I say that because this is kind of similar, where it's like really early and you kind of have to wait for it to grow. And what I typically would do is once I got into good profit, I'd typically sell like half my position to recoup my money plus take profit, and then the other half I let it ride.
Exactly.
And if I believe in the project, and then. This doesn't mean investing blindly. This means I watch that project like a hawk. And if it gives me doubts as to that original thesis why I got in, then I'll close my position. But as long as they're hitting the marks, I leave that other half in. And I don't care because I've already taken my money plus my profit, and then I let it ride for that upside. I made a video a long time ago about why you'll never get rich investing in cryptocurrency was the title. And I basically said, you heard that if you put 1,000 in Bitcoin in 2010, it'd be worth 100 million today, but you never would have made 100 million. And the reason why is because you would have sold so many times. You would have sold them up and down, whatever. And the way that you avoid that is by taking your profits, letting some ride, and then following the progression of the technology.
Right. All right, Mark, we're about 56 minutes in, and I know I have somebody upstairs fixing my refrigerator. Which is good because we've been without one for 2 weeks.
That means you got to eat out all the time.
Oh, it's been terrible, man. Like a brand new refrigerator. Had it 30 days, and the circuit board just completely went out on it. We lost everything in the fridge. We've been eating out pretty much every day. I probably gained another 5 pounds. My wife told me last night, when that fridge goes in, we're going on a hard diet and you're doing it with me. And I'm like, oh, awesome.
Juice cleanse.
Yeah, she said something about detoxing and just all kinds of stuff. I'm like, my wife is nuts, man. She's a health crazed nut. So anyway, look, man, we need to do this more often. We'll chat about it, but I love having you on. I love hearing you talk.
Thanks. I appreciate that. I'd love to come talk at Chainwise if you have some spots.
Absolutely, man. I would absolutely throw you on there. Just hit me up with like some topics, things you want to discuss, and I'd be more than happy to put you on.
Give some thumbs up on this right now if you want Crow to bring me to Chainwise.
There you go.
Let's see if we can get some thumbs up on this video. I haven't seen too many. We've got a bunch of people watching and no thumbs up. Come on, guys.
Yeah, we've been about 400 people watching, and I can say there's probably 20 thumbs up on the video. I for whatever reason, man, you got to really hound them. You got to like push them real hard to click that thumbs up button. But
there we go. We're jumping. We need some more thumbs up. I mean, come on, guys. Like, we're out here just giving free information. I study these markets. I'm bringing a lifetime of experience to you guys. I've lived through 3 crashes before, and we do it really just for you guys. And what brings the value back to us is just knowing that it's helping you. And so your comments on the videos and your thumbs up really make a big difference for us. And that's what keeps us going. So if you like the content and you want more of it, tell us you like it.
Exactly. Absolutely. Mr. Mark Moss, there's a link right under this video, folks. For those of you on my channel, there's a link to Mark's channel. Go subscribe. Listen to this guy. He's a wealth of information. We haven't even touched on half of. We haven't done anything today in comparison. Check the guy out. Very cool dude. Always been very legit, very upfront, clean as a whistle in my book. Definitely worth a subscribe and a follow. And obviously, I'm gonna have him back. And let's get him on Chainwise and help him educate the masses. It's getting closer. Still a little less than 3 months out. The big marketing's going to be starting here pretty soon. Booths are still available, all that fun stuff. It's going to be all over television and radio and everything here in the tri-state market for sure. I'm going to be doing some more online marketing for it here soon. So definitely pumped about that. But yeah, that's it for now. Mark, it's been an absolute pleasure, man. I appreciate you coming by. Anytime you have something to say, something you want to discuss, you let me know and we'll be much quicker about it from now on.
Cool. Thank you so much. It's always a pleasure hanging out and talking. I've been looking forward to this since we got on our little thing together on the stage a couple of months ago. So yeah, great talking to you, and I'd love to be back. So we'll talk soon.
Absolutely. Until next time, crow your coins, folks, and I'll see you again. Have a good day. Have a good week. It's just Monday.